Now speaking, Jesse Lynn, General Counsel. Icahn Enterprises LP is protected by the Private Securities Litigation Reform Act of 1995, which allows us to make forward-looking statements about our future performance and potential acquisitions. These statements may include words such as expects, anticipates, intends, plans, believes, seeks, estimates, will, or similar words. Actual events, results, and outcomes may differ due to a variety of known and unknown risks, uncertainties, and other factors, including the severity, magnitude, and duration of the COVID-19 pandemic. Now speaking, David Willits, President and Chief Executive Officer. Icahn Enterprises reported a net loss of $270 million and adjusted EBITDA of $116 million for the first quarter 2023. This includes a large one-time non-cash charge of $226 million due to the Auto Plus bankruptcy. The firm has $1.9 billion of cash on hand and $4 billion of additional liquidity in the investment funds, making them well-positioned for future success. 90% of their NAV valuations are comprised primarily of either mark-to-market securities or audited GAAP book values or external valuations. Since 2017, the firm has generated over $5 billion of cash from successful sales of controlled companies. Icahn Enterprises declared a dividend of $2 per share for Q1 2023, and their indicative net asset value as of quarter end remained relatively flat at $5.6 billion. Now speaking, Ted Papapostolou, Chief Financial Officer. Company reported a net loss of $270 million and adjusted EBITDA of $116 million for Q1 23, compared to a net income of $323 million and an adjusted EBITDA of $616 million in Q1 22. Investment funds had a negative return of 4.1% for the quarter, driven by short positions, with long positions and other having positive performance attribution of 1.3% and 0.8%. The investment funds had a net short notional exposure of 38% at the end of Q1. Energy segment reported net sales of $2.3 billion, adjusted EBITDA of $229 million, refining margin per throughput barrel of $23.24, and cost of RINs of $39 million for the quarter. Automotive segment reported adjusted EBITDA of $21 million, net sales and other revenues of $457 million, service revenues up $16 million, and part revenues down $129 million. Real estate segment reported net sales and other revenues decrease of $5 million, adjusted EBITDA of $3 million, resort business flat year-over-year, and a potential impairment due to termination of lease with tenant during the quarter. Other operating segments reported relatively flat net sales and other revenues, adjusted EBITDA improved by $4 million or 31%. Home Fashion's adjusted EBITDA decreased by $1 million compared to prior year quarter, while Pharma segment's adjusted EBITDA improved by $1 million. The company ended the quarter with cash equivalents, investment in funds, and revolver availability of $6.9 billion, with subsidiaries having $740 million of cash and $305 million of undrawn credit facilities. Now speaking, David Willits, President and Chief Executive Officer. We thank you for your time and have no questions. We are issuing a report in response to the short seller report today around 11 o'clock. We invite you to join us on our next quarterly call.